Dell Technologies is an interesting AI stock to consider. It's becoming more and more so an AI business and less a personal computer business. But is the stock a buy at current valuations? I'll answer that question in this video, looking at Dell's revenue growth history, its operating profit margins, the returns on investor capital. I'll also look at valuation. I'll share with you my proprietary discounted cash flow valuation calculation for Dell Technologies, and I'll also look at the forward price to earnings ratio and price to free cash flow ratio to determine if Dell stock is a buy at current prices. Let's get started.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in the most recent quarter, Dell Technologies reported revenue growth of 7.23% overall, and that was driven primarily by the data centers for AI business. That segment of Dell's business is growing rapidly, and it's grown to eclipse over 50% of the company's overall revenue. That means today's investors in Dell stock are getting a business that's more concentrated in the AI data center space and less concentrated on the PC space, which is a more attractive investment. As an investor, you would prefer a business more focused on AI and less focused on personal computers because the AI industry is forecast to grow more rapidly, whereas the personal computer industry is a more mature industry with only replacement demand as the main driver for revenue in that category. And with the AI category, you're having significant growth in that space that's expected to persist for at least another decade. So that's why investors prefer to have a business more focused on AI. Dell also offers a dividend, and most recently it announced a big increase to its dividend per share. The dividend yield is not extremely high, but it's there for investors that prefer a stock that also pays a dividend. Dell's dividend yield is 1.84%, and if the business continues growing as it has been, and it has robust market share in AI, I wouldn't be surprised if this dividend per share continues growing for the next 5 to 10 years at the very least. Now, Dell's trailing 12-month operating margin has also been rising since hitting negatives in 2017. It's recovered nicely. It's still not very exciting at 6.37%, but the operating profit margin has shown several consecutive years of increase. And heading into 2025 and perhaps the back half of 2025 and starting in 2026, I expect the PC category to rebound and recover because of the replacement cycle, most noticeably, and coupled with the continued growth in its AI business. I wouldn't be surprised if Dell's operating margin approaches 10%. I don't suspect it will go very far above 10% because Dell's business is very hardware focused, and it's difficult for Dell to generate profit margins above the mid double digits because of that constraint on its business. It's more difficult to generate higher profit margins when your primary product category is hardware. Dell's returns on investor capital are solid and increasing at 19.58%. Remember, Dell's personal computer business is a relatively asset-light business model. Even though it's focused on hardware, Dell doesn't build the computer in most cases until the customer makes the order and makes the payment. Dell has close relationships with its suppliers that are close to the assembly, and when a customer makes an order, the unique business model then begins to build that personal computer. In that way, Dell does not spend money on the inventory until the customer makes the order. And so that is an asset light way to operate a PC business. It's also a less risky way to operate a PC business because you're not building up inventory in anticipation of what you think customer demand will be. You're building to order, which is a less risky strategy. And if you've optimized your supply chain in a way where you can still send the customer the computer in a relatively short amount of time, it alleviates some of the downsides of operating on that build to order model, which can sometimes delay deliveries to customers, and customers might choose a different company to buy from that can send them the computer sooner. So another thing I consider when I'm looking at the return on investor capital is the weighted average cost of capital. And for Dell, that number is 9.31%. So its ROIC to WAC ratio is solid at over 2. I like to see that from companies that I'm considering as a recommendation. Also, the intrinsic value per share for Dell stock, which I updated today, March 18th, I calculated at $177 per share compared to the current market price of $97 per share. If you want to see more detailed DCF calculations, you join as a channel member where I have dozens of members only videos doing discounted cash flow valuations. Looking at the valuation on a forward price to earnings basis, Dell stock also looks cheap at 9.2. But when you look at the price to free cash flow of 37, Dell stock looks relatively expensive. But the price to free cash flow could be hurt by the growing AI data center space, where that side of its business doesn't benefit from that build to order model as the personal computer side of the business does. And I've seen other companies in this category, the AI data center category, most notably Supermicro Computer, which are generating strong negatives because the growth of the business is so rapid that you're building up inventory to install for your customers, and then you're not getting the payment until 30, 60, maybe 90 days later. So that side of the business doesn't have the cash friendly model like the PC business has. So you have this give and take there where it's a more attractive category by growth, but less attractive from cash flow perspective. But I would still prefer that side of the business to continue growing as a larger part of Dell's business overall. So to answer the question, is Dell stock a buy at current prices? I would say yes. I would say yes. And I updated my valuation of Dell, and I noted that the stock is a buy today, March 18th, 2025. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.